Hello traders, welcome back to my video. Today I'm going to do a trade recap of AUD dollar that I took on last Friday. Now I will show you what my thought process was when taking this trade. Now I actually shared this setup in my G trading room. Now wait a second. Right. So I actually shared this setup on my Telegram here. As you can see, this is the AUDUSD setup, which is shared on February 21st. It was last Friday. Let me go to my TradingView account here. USD. Okay, so this is the trade that we took on last Friday. I actually took this trade both on my live account and FTMO 100k challenge account. So for my live account, I risked a 10% of my live account, which is around $150 on this single trade. And for my FTMO account, I risked around 1.5% on this account, which is $1,500 in this trade. Now this is basically how I plan my risk management for my trading system. So as you can see right here, I took a long position at this 0.63957 level, and my stop loss is below this candle, which is 0.63264, and my take profit is on the price level of 0.64659. So that makes a 1-to-1 risk to reward ratio trade. So you can see this trade is actually a loss. Let me show you my thought process of taking this trade. Now before that, let me erase everything on the chart here so that you can see a clearer image of the chart. Now this is the weekly time frame, and the first thing I noticed is this support level right over here, where you can see this is the lowest price level in the year of 2022, and you can see that the price hit this level again and form some bullish momentum in it. Now we are going to move on to the daily time frame. You can see that the price actually reacted to this support level and form some bullish momentum in it, causing the price to move upwards, but it dropped again, forming a long wick right over here. So long wick means a rejection that the price is going to move upwards. So it went up again, forming double rejection right over here. That means it is a clear sign that the market is going to become bullish. Now the next thing you can see is there is a resistance zone right over here that we can notice. This is the previous high of the market structure, and as the market broke past this level, it came back and retest this zone, forming a bullish engulfing candle. Then before that, there is also one more thing that I also include in my analysis. Can you see there are multiple rejection here? So this one, a demand level that I put it over here. This is a demand level. You can see that in the year of 2024 at this price level, but then it went up and dropped again, forming a long wick rejection right over here. That means this is also a significant level that we must take into account. Now you see this is the supply level right over here. So let me write it down here, supply level. Here's a supply level, as you can see that I have written in the chart here. So as soon as the price broke past this resistance zone, the price actually reacted to this supply level. So when it reacted to this supply level, you can see that there are a few doji candle form. There are a few doji candle form right over here. Doji candle. Doji candles mean consolidation stage. Means the price is in ranging motion. And now you can see after the price has finished its consolidation stage, it went up with a strong bullish engulfing candle, breaking past this supply level. So we consider this as a bullish momentum in the market. So this is actually my main confirmation of this trade, which is the bullish engulfing candle closing above this supply level and breaking past it. However, there is also a resistance zone right over here that we can see, which is a previous high of the market structure. This is the previous high of the market structure. That is why this is a resistance zone that we don't want to fight with. Here is a resistance zone, but then we are going to enter a trade right over here where my stop loss is right below this bullish engulfing candle, and the take profit is 1:to reward ratio around here, but I took at the lower price position, so it's around this level around here. So it's a 1:1 risk to reward ratio trade. The reason why we took a bit lower is because we waited for the London session to come before we take the trade. So that's it. I think that was pretty much how my thought process was when taking this AUD US dollar trade. Let me show you my Justmarket account right over here, where I actually took this trade and it turned out to be a loss, $152 right over here. Alright, and you can see this is the AUD USD chart. The price when I entered, it was this level, and when it dropped here, it hit my stop loss and it become a SL trade. Alright, now let me change my screen bigger first. So what I want to say is, losing is inevitable in trading. Always follow your game plan and do what is necessary, like journaling, reviewing your trades, and fine-tuning your strategy. By doing all this, you will be rewarded in the long term. Now, one thing you need to know is that trading is not a 100% win rate game, and the most important thing in trading is being consistent. You don't need to have the best strategy in the world. You don't need to have the highest win rate strategy in the world. In fact, there is no best strategy in the world. I'm still learning to be more consistent in the process. You never want to rush the process as quickly as possible, because you will lose everything if you try to rush the process. I experienced that before personally, so this is one of the best advice that I can give to every one of you watching to my video. I will rush the process, even if it's a loss, if it's a losing streak, just take it and move forwards. So I hope all of you can learn something from my video here. If you enjoy the content, please don't forget to like, share, and subscribe. I'll see you all in the next video. Bye bye.